Hello once again, I'm Pierre Schultz for yet another stock market update on August 25th. Today gets all my video attention, I guess. I have the Einstein model all set up for you for the roughly October 20th crash low in markets. I've often said that the longest trend is the strongest trend in some of my work. And so, yeah. The Einstein model has a nice clean crash sequence all set up. So again, this is a long journey through the end of 2034. I believe we'll have the Great Depression from 2031 to 2034. And that the Great Depression kicks off in about 60 months, just a little over around Labor Day of 2030 through around Christmas of 2031 or 2030. I expect a major peak again. Labor Day through Christmas of the year 2030, I expect the macro peak in markets, and then 2031 through 2034, or 2033 I should really say, is the heart of the Great Depression window, and then 2034 is the tail end. If 90% of the crash occurs through 2033, then we trickle down a little bit lower into 2034, and then that should be it. But the Great Depression should last about 3.4 years. Let's move on to the Einstein model. All right, so the Einstein model is what created that quick crash in markets in early August. So that was a pretty long trend. It's that blue trend line that I have drawn for you going into that early August time frame. And that's what wrecked markets for the first couple days in early August. I was hoping for a bigger crash, but as much as we got. But you can see we have a 1, 2, 3, 4, 5, 6, 7 count in my estimation going into the roughly the October 20th through 23rd, let's say, low. So looking for some kind of final peak in early October, and then a crash into October 20th or 23rd. And yeah, I think this is a pretty clean trend. The 1, 2, 3 are pretty crisp. 4, 5, 6, 7 as well. Very good alignment there. And it's a pretty long-term trend. You can see some of the other calls it called out. You can see around June 20th, 23rd, 24th low it called out. You can also see the crash low in early mid-April that it synced with. So I feel like this is a good setting, so to speak, for determining or seeing crashes far in advance. So I would hope that we top out. Maybe we stay topped out at 64.90 on the SPX 500 USD on tradingview.com. I don't know. I'd like us to see us punch up above 6,800 in early October, and then have a healthy crash or sideways crash movement into October 20th, and then that would be the bottom, and then we would start the year-end rally off that, from what I can tell. So that will be the next major low from what I can foresee, and then yeah, the year-end rally, and then some kind of, I think, double peak into early February, and I think the most severe crash will occur in late February, March, early April of 2026, believe it or not. We'll get, 3 of those in a row. We had the 2024 crash into April, with 2025 a crash into April, and 2026, so 3. And I think we're done with these April crash windows. But as for right now, yeah, you can see it's a pretty long-term trend. Pretty interesting how the markets were able to stay so strong into the early August crash, because that really was a long-term crash trend that hit in early August, but it just fizzled out so quickly. It's quite interesting. But we should have pretty serious downward pressure again around that Black Monday window of 1987, around October 20th through 23rd should be the final low. And just want to give you a different perspective from the last video. I thought this was pretty good. I like all the touch points. So this creates a type of downward pressure or crash pressure. I view it more also along the lines of liquidity cycles. This creates some type of cyclical reset, if you will, in liquidity in the markets. So essentially the markets run out of gas, and then they crash into each one of these points. I think the upper limit is 175. I think these are all 25 degree of separated horizontal lines, and I think I don't know, I can't remember what the bottom horizontal is, if it's like a negative 100. But yeah, so it's not a simple positive 100, negative 100, 0 type of graph. I have to offset the ceiling, if you will, and you can kind of tell by the top of the graph. And then there's just a lot of space between the top of that zigzag sawtooth graph and the very top of the graph, and then the upper limit of the chart, let's say. So yeah, I expect pricing to reset into roughly October 20th. That's going to be a major low, and then it's time for more blasting off into the sky, if you will, for pricing. I'm not sure how long this little jog down lasts. In the chart, to me, it's interesting when the graph tops out like it did up into the end of July. It pulls down and then pulls back up. That's what it looked like in February of 2020. It did this exact same pattern, and then it had a huge crash after this pattern. So basically, you let a little air out of the tires, it drops down, pops straight back up, and then it levels off, creates like a top just under the old value and flattens out. And you could argue that the 5 waves from mid-March were complete at the end of July, and maybe this is a 5-step, from a graphing or this Einstein model standpoint. Maybe it's a 5-wave down scenario, right? Because we went 1 down, made a downward move in the zigzag graph, in the Einstein graph, into that early August, and we pop back up now for like a leg 2 up. And yeah, it gets tricky. I mean, President Trump really puts a different spin on the markets. Normally, in normal conditions, this would create a very big crash in markets. What we're seeing here, primarily because the leg down went down around the center of the graph and then popped back up. Now, if the leg would have gone all the way down near the bottom, that would have completed a full reset, if you will. If you look at points 1 and 2 that are highlighted on the yellow line, that's when you kind of know that the markets have fully reset. When they get down to that bottom black horizontal, or maybe the second from the bottom, around a little bit higher than point number 2. That's what a market that resets looks like. A market that's extremely weak is one that goes below the black horizontal line, like we saw in March and April. That's what kind of threw me off in April, because normally we don't bottom that low. So that's one of the reasons why I thought we would punch higher and then pull back, and then sit on top of that black horizontal line, and then rip back up. But I should have seen from mid-January that doesn't always happen, right? Mid-January went below that black horizontal line and then ripped back up and started a whole 5-wave process. And yeah, so that's what it normally looks like. So, but we haven't fully reset, as you can tell. They should have let the markets fall a little bit further. And they could have actually, in my opinion, they could have maybe avoided this crash that's coming, or maybe created a 5-wave sequence into early October and maybe shorten the crash. But I think this structure lends itself more to a crash because the Einstein zigzag graph didn't go down and clear more towards the bottom. That's when the pressure is released from markets, and then it starts back 5 waves. This it's kind of like an old musket. It's kind of like the hammer's drawn back, right? The lever arm is cocked at this point, and it kind of looks like it wants to crash more than it wants to pop upwards. So we're in a very fickle situation right here. It would be better if the markets, or if the graph would actually break down, because then it would create more of a buying opportunity. And yeah, so this is more of a limbo situation. It's not really like the markets have completely had a full clearing, let's say, full reset. I think that's what's going to occur into October 20th. I think that the model will finally break down, and then we'll see like a 5-wave sequence, more than likely, kind of like late 2024. We could have 5 waves up after the October low. October 20th low will have like a 5-wave move up in the model. So if you look to the left of the graph, you can see the 1, 2, 3, and you can kind of see how the graph shot up for 1, down for 2, up for 3, down for 4, up for 5 into that mid-December peak. It made 5-wave movement in this graph. In my graph, not speaking in pricing terms, but in this graph, this indicator. So if we hit a full reset in the model into October 20th, then we could have like a 5-wave move into early February in the graph itself, and then that would allow for the crash that would occur in March and April. So it's kind of a weird and fickle moment that we're in the model itself, because if we're supposed to reset in a month and a half away, the graph just kind of makes me wonder, are we just going to sit here for a very, very long time? Is it going to play tricks or games, or is it going to play some kind of weird 5-wave move that I've never really seen before, kind of like from January into late February of 2025? That's a very unique 5-wave pattern that you see there, and it doesn't really top out like it has already here in August. So again, so I feel like we're in a very interesting position. Like I said, normally this would create a pretty big downdraft, but a lot of my models show a peak around, as you know, around early October. So it's a difficult read here, but it would be nice if we got up to a nice 68.40 or something around early October. But I guess if we just keep treading sideways into October 1st or something, then either way, I'm very intrigued by what the pricing upper limit will be if we do top out in early October, assuming that the models are correct. So anyways, I've made this video a little bit longer than I expected, but hopefully you enjoy this video, and hopefully I think this graph provides clarity, at least for me, in building a high confidence that there will be a crash low, a major market low around October 20th through 23rd. Thank you for joining me. I'm BR Schultz, SP500. Until next time, take care. Again, this is just a snippet of the GoFundMe page. I didn't want you to forget that, so thank you, and please bookmark it, whatever, and watch it over the next decade or into late 2034. Thank you so much.